Okay. Let's get busy here. By the way, huge week coming up. We just saw a big bit of news come out on Canada, and it really rocked the currency. We have a lot of big news coming up this week. We also want to take a look at ways to play this. Everything's beginning to trend a bit, and the dollar, part of it is the dollar. If I go to the dollar is clearly trending, right? You can see a trend here on the U.S. dollar index, and it's right now at the upper end of its channel. You can see there's very clearly a series of lower highs, but that's the upper end of the channel right here, and we were just above it yesterday. We're sitting right on it today. But I think what becomes interesting is when we begin to apply moving averages to some of these currency pairs. If you look at, now this is on the dollar. The dollar index basket is beginning to show some resilience on its 10-day exponential. That's the index, right? So 2 days ago we had a bounce, 3 days ago we had a bounce, and so on and so forth. And then back earlier in May we had bounces off of that moving average. So it only goes, now because that's happening in this time frame, it only goes to follow that that we could be seeing bounces against, because we're seeing bounces against a basket, we could be seeing similar bounces against individual currencies. Like when I look at this one, dollar Canada doesn't really show. I mean, there's a little bit of activity here, but it pierces, so not really a great example of this. But if I push it out to the 20 period, because when the 10 breaks, the 20 often catches it. If you push it out to the 20 period, this one actually looks pretty good. The 20 period moving average for dollar CAD looks interesting as a buy point, right? And that currently that moving average is at 129.79. So the price would have to come down a little bit before it gets there. But let's take a look at some other ones. And like the way that I do this, I'll put the 10 and the 20 exponential up on the screen, and we'll differentiate them in terms of color so we can tell them apart. Right, so I have the 10 in blue and the 20 in black, and the 20 is money, at least to a slight extent here on dollar CAD. But let's keep looking, because the dollar is trending so strongly. Here's a pretty good example of what I'm talking about. Resistance all over the place on the 10 on New Zealand US dollar, on Kiwi. When the 10 breaks, it catches on the 20. Right? Again, here are the 10 breaks. It almost catches on the 20. Here's some hits on the 10. And so this to me is interesting. Right? You could be in the early stages of a downtrend on dollar yen, one where and we had a fantastic one earlier this year in dollar CAD. You look at this on the 20, dollar CAD again and again. Here, put an arrow right there too, right? Again and again hits the 20 and drops. It goes on for a very long time. And look, you are not going to catch a lot of trades like this. But if you caught one trade like that a year, that could make turn a bad year, or could turn a mediocre year into a pretty good, decent year. So, and Pan on Fire is pointing out oil is toppy too, and that also has an effect here. Now, Canadian dollar and oil sort of diverged when we had the big fire at Fort McMurray. We've talked about that quite a bit, and I think we saw that in today's GDP number. But if you look at oil has been hanging around 50 now for a while. It's still in an uptrend according to my charts. It's still trending higher, and it's still in this bullish channel. But if you do look at it, 1, 2, 3, 4, maybe even longer, it's been going sideways. Now, Is it just catching its breath, or is it legit having problems with sellers at 50? That's a really fair question. Mentally, I'm going to say they probably have legit problems with sellers at 50. Let's face it, oil was below 30 not that long ago. So it really wouldn't surprise me if people wanted to sell at 50. Think about all the supply out there. They talk about phantom supply, oil floating around on tankers. Someone showed me a picture, a photograph of the area like right near Singapore, and the number of boats, the number of ships that were just sitting out there waiting, and the number of ships had increased dramatically over the average. And they said, well, it's just ships full of oil are just parked there. They're storage, basically. So if you've got all this potential sort of hidden supply, and the price hits 50, you can bet somebody out there is going to say, yeah, I'll sell it when it hits 50. All right? Maybe somebody who's not necessarily looking at a chart thinks 50 begins to sound pretty good. And so they may very well have a problem there. But technically, I can't call it a breakdown yet. We're going to have to be patient. This could just be a pause before it continues to move higher. But, in the back of my mind, I'm thinking, I know there's ships full of oil out there. So at any point, oil has stopped rising. It's hit 50, and it's just kind of laid there just under 50 now. I think 50 presents a problem for oil, at least for the short term, maybe longer. Not sure if oil will keep going against the correlation because of the Arab trouble. But, I'm thinking in terms of just a lot of supply out there, a lot of supply that we don't really count, a lot of supply that is in the ground that we could easily get to if the price continued to rise. And, of course, you bring in more supply that will cure. They say the cure for low oil prices is low oil prices. Well, if you have a lot of supply in the ground, then the cure for high oil prices becomes high oil prices. But I digress. So we'll keep an eye on this. I don't want to say the jury's out right now on oil. It sure seems like it might be having trouble at 50. Let's take a look at some more pairs, though, because the type of activity that we're seeing looks kind of interesting to me. So here, this is pound yen. We see a little bit of love on the 20-day moving average, right? So we can keep going. Euro USD is so weak that it can't make it up to the 10. So it wouldn't surprise me if it just smashed right through the 10 and went to the 20. We can take these markings down now, as they are quite old. This begins to look like a big, rather large top, too, like maybe a left shoulder, a head, and no right shoulder. It just doesn't even have time to form one. And clearly breaking through key support levels was a big part of this. So anyway, that's fascinating, and we're coming down toward 50% retracement. Not technically, that is not a Fibonacci number, but a 50% retracement of the rally is coming up very soon. Right, and so that bears watching. British pound is kind of wild these days, and I think I like it more for the short term than for any type of trending long-term strategy, because there's just going to be so much disruption from day to day based on polls. And really, if you think about it, even on a short-term trade, if you're on one side of the trade and a poll comes out, and it shows that you're on the wrong side of the trade, then you're going to lose, and it doesn't matter. Nothing else matters. It's like it's just going to be. Now that we are only 3 weeks away from the vote on the EU referendum. Okay, let's take a look. Let's continue with Aussie. Aussie's weak, so weak that it can barely get to the 10. But here today, it gets to the 10 and gets through the 10 pretty nicely, actually. And it has been flat. If you look at it, 1, 2, 3, 4, 5, 6, 7, 8, 9 days of flat. So you don't really want to enter a trending strategy on something that's going flat. What about odd against Kiwi? They're both kind of weak. Not really looking that great. Let's take a look at what else? How about dollar Swiss? Well, it's a little bit of love on the 10 here, and here it comes. Today it just almost touches the 10. Maybe it'll touch the 10 a little bit later. Dollar yen is very clearly running up the 20 here. You had some bounces on the 10 back here, 1, 2, 3, and now some on the 20. 1, 2, 3 out of the last 5 candles, it looks like, make contact with the 20-day exponential moving average. This one actually just misses by a pip or two, but these candles definitely hit. So I think the 20 is where we want to buy dollar yen. Now, the interesting thing about the yen's moving because of a tax issue. Abe, and this really shouldn't really come as a surprise, but apparently it moved the markets over the past few days. Abe is pushing back a sales tax. You see, originally they said, hey, Abe, this is Japan talking now, hey, Abe, you can do your Abenomics if you promise to raise taxes. And of course, raising taxes just means that you're going to slow down the economy. He's trying to stimulate the economy. So he's pushing back these increases in taxes. You know, he's not cutting taxes, he's just keeping them where they are. And that's helping. That's helping dollar yen to move higher. It's helping the yen to weaken against a lot of different currencies. But it's kind of odd because for weeks now they've been talking about, we've been seeing chatter about this, that he was going to do this. It really shouldn't come as a huge surprise that he was going to defer this tax increase. And yet it seems to be moving the market. So dollar yen is up. Euro yen, uppity up. We already looked at. That's moving higher, although it has pulled back a bit today. Again, a lot of the yen stuff, a lot of the pound stuff pulled back because of a Brexit poll that seemed to say that it was pretty much neck and neck between leave and remain. The odds at places like, the funny thing is, right? The odds, I checked Paddy Power today. Like, Paddy Power is a betting site, and they're giving 6-to-1 odds that that the UK remains in the EU. I'm thinking, my God, at 6-to-1, I'd throw 1,000 on that. We can't do that in the U.S., unfortunately. But at 6-to-1, I'd throw $1,000 on it just for the heck of it. I mean, it doesn't seem to me that it's a 6-to-1 proposition. It seems to me that it's maybe 2-to-1 is still really good odds. If you said it's a 2-to-1 chance that the UK remains in the EU, I'd say, well, those are good odds, right? But they're saying 6-to-1 against Brexit. Sounds to me like, gosh, I would throw down money on that. Pan on Fire says, checking it now. Thanks for the tip. Any other horses? You know, it just seems to me that those numbers seem out of whack. Like, okay, odds are, I'll say it right now, odds are the UK remains in the Eurozone. Odds are you're going to lose if you place that bet. But it just seems to me that those odds are skewed. I don't know, just from, maybe it's my perspective that's skewed. But it just seems to me that those odds are skewed. Can we look to British pound, US dollar? Absolutely. And speaking of Brexit, like, that's been one of the driving factors. The polls have been positive overall. So overall, this has been creeping higher. But today's intraday movement, a lot of today's intraday movement had to do with a poll that was released that said that, gosh, you know, the Leave camp is gaining steam. So we saw a sharp drop in cable today. And I believe a lot of that is because folks believe that the Leave camp is gaining momentum. and they're pulling very close to even. That's why I said 6-1 is a good bet, you know, because the online poll says 45 to 45. How is that 6-1 against? The online poll says 45 to 45. Well, you could say, well, maybe people who vote online don't. Maybe that doesn't show a true representation, right? But gosh, it sounds closer than 6-1 to me. All right, so let's look at this one on the daily first, and then we'll work our way down. There's no real bouncing going on here on the moving average, although I will say like a little bit on the 20. A couple bounces off the 20-day moving average. I'm going to look at the weekly. I just want to push it way out. Look at the. Ignore that bell. That's the open of the equity market in the U.S., but we started late today, so we're going to keep going. We've got some bounces going on there, but really a lot of volatility. Now, how do you want to trade this? I think directional trades don't make a lot of sense. I think breakout trades make the most sense. Breakout trades make the most sense here. Now, let's take a look. So, for example, let's take a look at a 5-minute, and let me get rid of these moving averages, right? Only one choice how to play this right now, I'd be playing breakouts. Let me see if I can pull up volume. We know that volume is only the broker's volume, right? And we also, by the way, TradeStation, I'm showing you TradeStation charts, but TradeStation is no longer going to handle Forex. TradeStation has sold their Forex to Oanda. But breakout trades look like this. You look for a period where things are really quiet, and you sort of rope that area off, and whichever way it breaks out, if it breaks out downward, you sell. You put a sell order down here and a buy order up here. In this case, that would have worked swimmingly going into the Asian session last night. Huge breakout, huge run, right? Looks like it's going to run 70 pips before it runs into a wall. And then, so you look for those times of day. So that time it works. Now you look for another time of day. Here's another time of day, and you sort of wall it off again. Now this time, I think it's going to fail. Again, you buy if it breaks to the upside, you sell if it breaks to the downside, and go. Looks like it's breaking to the upside. Now, if that's enough to get you long, usually when I do this type of trade, I'm placing my order 5 or 10 pips above this sort of narrow range. If that's enough to get you long, it's going to be a losing trade. All right? But you know what? One loss and one win, you always contain your losses. You have the opportunity for a huge win. Even with one loss and one win using this strategy, you should be ahead of the game. You should be ahead of the game. Let's go back, and we'll look for another such area. The 2 a.m. thing here in the U.S. is kind of crazy. Now, if you're trying to use this type of strategy, you can't use it in here. Look how volatile it is. You need to see a nice, tight, narrow range. When you see that really wide range like that, it's like a 75 pip range when the market's supposed to be quiet. There's no way that I trade that, right? So let's look back again. I'm going to just keep going back. And the time that I'm looking at is going to be between approximately midnight and 2 a.m. And here's a good one, right? And you would have to get out of here, you. Jeez. Close. They make it so hard. Okay. So here's one. It looks like maybe this is down here, right? And this is here. And boom, it breaks to the downside, and it's a winner, right? And then it's going to come up and stop you out if you're still in the trade, but it should be a winner. These are the type of trades I would be looking to do. I would just be looking for this in a tight range. Why? Because I expect explosive movement. And I expect unpredictable explosive movement. Here we are again, and this is a fairly tight range. This is 147.02 to 147.20. It's about a 20 pip range. So I put my borders, and I'm looking at the area between about midnight and 2 a.m. Eastern time. That would be between 5 a.m. and 7 a.m. London time. It would be between noon and 2 p.m. Singapore time. Right? So I've got my borders in place. Boom, this is going to be a winner. Maybe a small winner, but a winner nonetheless. Let's go back another day. Here we come again. We take that area between approximately midnight and 2 a.m. and we put borders around it. 146.15 to about 146.04. It's a very tight area. And which way does it go? Boom, there's a winner. It's 15 quick pips to the upside. You got to be aggressive taking profits on these. I'm probably not going to catch this bigger move because I'm going to just take the profit right away. You got to be aggressive. So to me, this is the only sensible way to trade it right now. Either coming out of the UK session or coming into the Asian session. Coming into the UK session or coming into the Asian session. Here's a beauty. Right, again, we go to the area between midnight and 2 a.m. Eastern time. That's New York time. Also between 5 a.m. and 7 a.m. London time. And we've got about a 20 pip range here. If it breaks above, we buy. If it breaks below, we sell. So we wait, and kaboom, explosion, huge move to the upside, 40 pips quick in 20 minutes. Take the profit, or if you want to try to squeeze more out of it this time, it's going to work. But to me, it's a short-term trade. So that's really the only way that I would consider trading British pound right now. Anything else, a pole is going to come out, and it's going to cause your stop to get hit, or it's going to cause your target to get hit. But to me, that's just like flipping a coin. That's like gambling, and I've got no intention of doing that. So I'm going to look for tight ranges and trade those. This is odd that there's this kind of looks like it's making a big move, but it's not. That's a 15 pip range. You really want to see You really want to see it look like a tunnel, though. You want to see it really squished into a tight area. Here's one that's not going to work, right? This one has there's your upper end, your lower end is down here. It breaks to the upside, you're going to buy, but it only goes 5 pips, and it comes back down and hits your stop. You're done. So these trades, it looks like you get maybe 2 or 3 opportunities a week using these breakout trades. And out of those, you're going to have winners and you're going to have losers. But the difference is you have the opportunity for big winners. The closer you get to the EU referendum vote, the bigger your opportunity, the greater your opportunity, in my opinion, to get large winners. The closer you get to that vote, the greater the opportunity for large winners. Okay, great stuff. Stock market's open. Do you do the breakouts at certain times of the day? Yes, Fred, I would say that the breakouts work best either going into the UK session. Now, for me, that's you wall off that area, you cordon off that area between midnight and 2 a.m. If I were in London, it would be between 5 a.m. and 7 a.m. But there's also a period of time going into the Asian session. In New York, that's between 4 p.m. and 6 p.m. In London, it's between 9 p.m. and 11 p.m. And you get lots of opportunities for this type of trade. And, it should happen quickly. I mean, it should go fairly quickly. You can get in. You don't have to spend a lot of time in it, and you can get out. Hopefully, you make a nice profit. But the bonus is that you can do it quickly, that these moves that occur, particularly when it is morning when it's around 7 a.m., 8 a.m. in London, the moves that occur tend to be explosive. And I think they're going to become more explosive. This market is going to become skittish as we get closer and closer to this vote if the polls remain close. Okay? Because, the polls, we never know if the polls are right or wrong. Okay? So that's to answer your question. Times of day, if I'm in New York, the two times I would focus on are between midnight and 2 a.m. or between 4 p.m. and 6 p.m., breaking out of those areas. If I'm in London, the time of day that I'm looking at is between 5 and 7 a.m. or between 9 p.m. and 11 p.m. Okay, I hope that helps. Since we've got the stock market open, let's take a quick peek at it. Here in the S&P 500 here in the U.S., the U.S. markets have opened, and you can see we're right back at that borderline. Now, why does this matter? It matters a lot to the yen, for example. This has been moving up, and the yen's been getting weaker. If this chart turns, the yen could get stronger. Look how important this area is. Every time we come to 2100, fail. We close above 2100 and we fail. We close above 2100 and we fail. And this has been going on for a long time. This has been going on for more than a year now. That we can get above 2100, but we cannot get above 2135. You look at this within the context of the rally. The stock market tripled from 2009 through 2015. That's a triple. And in the last year, we've gone nowhere. We're right where we were a year ago. So we've gone up and down quite a bit, but the net result is we've gone nowhere at all. All right. So to me, this is really interesting because what's driving this? I'm not sure. We've already had a tremendous rally. Interest rates are rising. Political turmoil in the U.S. and the stock market is rallying. They say stocks climb a wall of worry. Well, I guess if you're the worrying sort, there's plenty to worry about. But this market doesn't look too worried, but the big test is, can it break through? Can it break through? This is on a weekly chart. All it has to do is break through the tops of these candles. It's close, but all it has to do is break through the tops. Can it get it done? Can it get through? I guess we're about to find out because we're sitting right at 2100 one more time. Okay, folks. Now, big week for data, right? We know that Draghi is speaking on Thursday morning and non-farm payroll is on Friday morning. And by the way, on Friday morning, don't forget to register event, right? I'm going to be at MIT, be able to attend, but I would, if I were you, I would try to attend Wayne's non-farm payroll event. Right, that's on Friday. We have Draghi on Thursday, and we have other stuff too. I mean, you saw the big move in Canada this morning from the GDP figure. Well, we're also going to get GDP for Australia. Right, and that's coming up actually overnight tonight. We're going to get GDP for Australia. And that could tell us a lot about China. Speaking of China, we're going to get some PMI numbers out of China. Those are China and GDP out of Australia just 30 minutes later. It's going to be a wild little segment. I'll probably be asleep for all this, right? But maybe I'll stay up for it. I don't know. PMI numbers, GDP numbers, all coming out, roughly around the same time. Am I going to be asleep? I'm not going to be asleep for that. It's not Eastern time. That's going to be tonight. Oh, I can't wait. This is going to be exciting. I got 3 China PMIs and I got a Australia GDP report all happening within 45 minutes. So you can bet that I'm going to be part of that. Okay, tonight. All right, so that's going to wrap it up from me. Thank you, everybody, for hanging in there with me. Great sessions today. Thank you again for listening, and I'll see you back here. I'll be back tomorrow. So be sure to tune in with me tomorrow. Thanks again for attending. Take care.